Hey everyone, and welcome back to the channel. Are you ready to ride the AI wave to massive profits? Because Wall Street thinks two recently split AI stocks are about to absolutely explode before 2025. I'm talking about Nvidia and Lam Research. But before you jump in headfirst, let's dive deep into why analysts are so hyped, what the potential risks are, and whether these stocks are truly worth your hard-earned cash. Forget the hype. We're here for the facts. Is this a genuine opportunity or a potential trap? Let's find out. This isn't just about the stock split. It's about the underlying potential. Are you ready to uncover the truth? Let's do this. Get ready for a wild ride into the world of AI investing. By the end of this video, you'll know everything you need to make an informed decision. First up, let's talk Nvidia. Nvidia, the undisputed king of AI chips. After their recent stock split, the price looks more appealing, right? But don't be fooled by the lower price per share. The underlying value is what matters. Analysts are projecting a staggering 53% upside for Nvidia. 53%. That's enough to make any investor's eyes light up. They're betting big on Nvidia's continued dominance in the data center GPU market, fueled by the insatiable demand for AI processing power. Think about it. Self-driving cars, cutting-edge robotics, AI-powered healthcare. All of it runs on Nvidia's chips. And their CUDA platform is the industry standard, giving them a huge competitive advantage. So, what's the catch? Is it all sunshine and roses? Not quite. Let's dig a little deeper. The AI revolution is only just beginning, and Nvidia is at the forefront. Okay, let's talk valuation. A P/E ratio of 44 sounds cheap, given the expected earnings growth. But let's be honest, that's still a premium price. It's like buying a Ferrari. You're paying for the performance. High-growth stocks like Nvidia are incredibly sensitive to earnings misses. If they stumble, even slightly, the stock price could plummet. The market is a fickle beast. And remember, that 53% upside is based on analyst target prices. Analysts are smart folks, but they're not fortune tellers. Market conditions can change on a dime. So, don't take those projections as gospel. Do your own homework. And what about the competition? The article mentions DeepSeek raising questions. This isn't a one-horse race. Other companies are gunning for Nvidia's crown. Innovation is the name of the game, and the pace of innovation is relentless. The AI landscape is evolving at warp speed. New architectures, new algorithms, new computing paradigms. It's a constant arms race. Nvidia needs to keep innovating to stay ahead of the curve. They can't afford to rest on their laurels. And while CUDA is a huge strength, it also creates a potential weakness: vendor lock-in. If a viable alternative to CUDA emerges, developers might jump ship. That could erode Nvidia's competitive advantage. It's a double-edged sword. And let's not forget about concentration risk. Nvidia's revenue is heavily dependent on the data center GPU market. A slowdown in data center spending would hit them hard. It's like putting all your eggs in one very expensive basket. And finally, there's the ever-present supply chain risk. Semiconductor manufacturing is a complex global dance. Disruptions can happen anywhere, anytime. Geopolitical events, natural disasters, anything can throw a wrench in the works. So, yeah, Nvidia is a powerhouse, but it's not invincible. All right, let's shift our focus to Lam Research. LRCX, the unsung hero of the AI revolution. You might not know their name, but they're absolutely critical to the entire semiconductor industry. Lam Research builds the equipment that makes the chips. They're the picks and shovels in this AI gold rush. Analysts are projecting a solid 20% upside for Lam Research. Not as flashy as Nvidia, but still a very respectable return. This growth is driven by the massive demand for advanced chip manufacturing equipment. As chips get smaller and more complex, companies like Lam Research are essential. They're constantly pushing the boundaries of what's possible. But just like Nvidia, Lam Research faces its own set of challenges. What are the biggest threats on their horizon? Let's break it down. The biggest risk facing Lam Research? Geopolitics, plain and simple. Specifically, the tense relationship between the US and China. China is a massive market for Lam Research, a huge market. But the US government has been cracking down on exports to Chinese companies, particularly when it comes to advanced semiconductor technology. If these restrictions tighten further, it could cripple Lam Research's sales and profitability. It's a ticking time bomb. Think about it. Tariffs, export controls, trade wars. These are all very real threats. And they're largely outside of Lam Research's control. It's a tough situation to navigate. The delicate balance of global trade is constantly shifting, and Lam Research is caught right in the middle. Are they prepared for the worst? Only time will tell. This is a risk you absolutely need to consider before investing. Beyond geopolitics, the semiconductor industry is notoriously cyclical. It's boom and bust. Demand for chip manufacturing equipment fluctuates wildly based on overall economic conditions. A recession or even a slowdown in global growth could significantly impact Lam Research's revenue. It's a roller coaster ride. And just like Nvidia, Lam Research needs to constantly innovate to stay ahead of the competition. Competitors are always nipping at their heels. They need to develop more advanced and cost-effective equipment to maintain their market share. The technology landscape is constantly changing. They're running a marathon, not a sprint. And finally, there's customer concentration risk. The chip manufacturing industry is dominated by a few massive players, like Taiwan Semiconductor, TSMC. If one of these key customers reduces their capital spending or switches to a competitor, it could hurt Lam Research. They're reliant on a small number of very large clients. It's a risk they need to manage carefully. Now, let's briefly touch on Pandora. Why Pandora? Because it serves as a cautionary tale. The article mentions Pandora missing market views and launching a buyback program. This is a stark reminder that even established companies can face challenges. Missing market views can erode investor confidence. And while a buyback program can boost the stock price in the short term, it's not a magic bullet. It's a sign that the company may be struggling to find other ways to create value. Pandora's struggles highlight the importance of diversification. Don't put all your eggs in one basket, especially a basket that's showing signs of cracking. The tech world is full of disruptors and disruptees. Be prepared for anything. Okay, let's zoom out and talk about general investment risks. These apply to both Nvidia and Lam Research, as well as any other stock you might be considering. First, there's market risk. Overall market sentiment and economic conditions can impact stock prices, regardless of a company's fundamentals. A market correction or a recession could drag down even the strongest stocks. And then there's the stock split illusion. Stock splits make shares more accessible to smaller investors, but they don't fundamentally change the value of the company. Don't be swayed by the lower price tag. Focus on the underlying business. And remember, analysts can be wrong. Their target prices are just educated guesses. Do your own research. Don't blindly follow the herd. And finally, the article suggests buying a small position. That's investment speak for we recognize the risks involved. It's a way of saying, don't bet the farm on this one. Beyond the financial risks, let's also consider the ethical implications. Nvidia's technology is used in AI applications. If these applications are trained on biased data, they can perpetuate and amplify existing societal biases. This could lead to ethical concerns and reputational risks for Nvidia. It's a responsibility they can't ignore. And then there's the potential for job displacement. AI and automation technologies could lead to job losses in certain industries. This could create social and economic challenges. And finally, there's the potential for AI to be used in surveillance systems. This raises serious ethical concerns about privacy and civil liberties. These are important considerations for any investor. The future of AI is not just about profits. It's about the impact on society. So, what's the bottom line? Are Nvidia and Lam Research poised for explosive growth? The potential is definitely there, but they also face significant risks. Geopolitical tensions, cyclical industry trends, intense competition. These are all factors you need to consider. Before you invest, do your homework. Understand the companies, understand the risks, and understand your own risk tolerance. Don't just blindly follow the hype. Be a smart, informed investor. And remember, diversification is key. Don't put all your eggs in one basket. Spread your investments across different sectors and different asset classes. This will help to mitigate your overall risk. The AI revolution is here, but it's not a guaranteed path to riches. Invest wisely, stay informed, and good luck. What are your thoughts on Nvidia and Lam Research? Let me know in the comments below. And don't forget to like and subscribe for more in-depth analysis of the tech and finance world. Thanks for watching.